Well, looky here. AMC stock up 5.77% on the day, down about 0.25% here in after hours. We need to talk. What in the world is going on? We have two articles to get into here in this video. Number one, from the street, AMC stock failure to delivers reached nearly 70% of August trading volume. Okay, and we're not manipulated, and nothing ever manipulation ever happens with AMC. The regulators are a joke, okay? That's really what that article highlights. Second article could have to do with at least one of the reasons why AMC stock did do well towards the end of the day today. It's from Invez. It says AMC stock price is in a free fall, but a 200% jump is possible. So we're going to cover these two things. Again, we're going to go over the summary of economic projections, what to be watching for coming tomorrow, as well as what the data looks like and where we currently stand with AMC stock. If that sounds like something you want to be a part of, hit that like button and subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. On top of that, if you guys want to come trade with us live in real time, tomorrow is going to be a big day. Link down below in the description of this video. Join the trading community. We will welcome you with open arms. Now, one thing that I do want to say as well, a lot of people ask, like, why don't I remove the bots in the comment section? I do. I try to. They come back. There's really no other way to put it. The comments are insanely filled with bots. So I try my best to keep them away, but they keep coming back. It's almost like there's no use to even look at. I mean, I don't look at them, but hopefully you guys don't as well. Just know, if there's a bunch of likes on any of the comments, it's bots. Okay, now let's go ahead and get into some of this information. Now, AMC stock was not doing so hot earlier today, and you really started to run into the end of the day. Now, this could be kind of a foreshadowing of maybe good news coming tomorrow. That is a possibility. That would make some sense. If the Fed does indicate that maybe we're going to get less rate hikes, or maybe a lower terminal rate for 2024 than we previously expected, and the current expectations is around 4.6% by the end of 2024, so implying quite a few rate cuts in 2024. If this number goes lower, it could be good. It could be good as long as GDP projections do not go down a lot and your unemployment rate does not go up a lot. So you basically want no change in the GDP, no change in the unemployment rate unless that falls. That would be good. And the Fed funds rate to come down and look like it's maybe not going to stay as high for as long. That's your best possible outcome tomorrow with the summary of economic projections. Now, I'm a little bit less optimistic. I do think expectations for GDP probably going to fall. Unemployment's probably going to stay the same. Inflation expectations probably going to stay the same. And I would imagine even the Fed funds rate gets projected down to about 4% by the end of 2024. That's going to bring up fears of a possible recession. In my opinion, we could be going into a full-fledged recession here pretty soon. You guys got to remember too, the UAW strikes just started, and that can have a big dragging effect on the economy, and that's something the Fed will likely take into consideration as well. Now, again, your worst case scenario is if GDP expectations go, almost to zero. Your Fed funds rate gets projected down to like 3.5%. That's your worst case scenario. That is the Fed literally saying a recession is coming next year. They're going to have to cut rates a lot, which cutting rates is fine. Cutting rates is great. The markets would love that, as long as your GDP expectations do not continue to fall and your unemployment rate does not continue to rise. Now, I don't expect the Fed's going to move the unemployment rate expectations all too much. They really haven't touched them in too much towards the end of 2023. They went down actually, so that was good. People did like that, and the for 2023, the terminal rate kept going higher. That was one of the big surprises we seen in June, and that's where the market started to expect more rate hikes. But your GDP estimates have been coming down throughout all of 2023 for 2024. Now that we're basically approaching 2024, nobody really cares about 2023 anymore. So don't even look at 2023. It's all about 2024. So keep that in mind. Now let's run through some of these articles here, and we're not obviously going to read all of them word for word, but just pick out the most important points. And the last thing that I really want to say on the summary of economic projections, again, the Fed meets at 2 tomorrow. The statement comes out at 2, and then you get the actual press conference around 2:30, and that's where Fed Jerome Powell is basically going to go over what the summary of economic projections said. And I think there is a decent chance that quite a bit does change this time from the last Fed meeting, right? The last time around, there was no strikes with the UAW. Some of the consumer data was looking a lot better. The only difference is, I guess, inflation has went higher recently, but a lot of that is due to really energy alone. Without energy having risen, I mean, the inflation report would have been very good and continuing to show a decline. I don't think the Fed cares about the headline nearly as much as a lot of people think, because obviously that's going to be very volatile, and I think the Fed already understands that. So I do think there can be some big changes here, and on your worst case scenario, markets could fall 3 to 4% if the Fed really does, signal that maybe we do head into a recession in 2024 and solidify that this is probably not going to be a soft landing, but probably a hard landing. If the Fed basically doesn't change anything, up or down 0.5% is what I would expect. If the Fed, let's say, increases the GDP expectations, lowers the Fed funds rate projection, lowers the inflation projections, and lowers the unemployment rate, your ultimate best case scenario, markets probably up around 2%. That's what I would expect. And I say only 2% because you've already priced in a lot of good things given where the markets are, and they're almost at all-time highs. What would actually do way better than that would be the Russell. The Russell 2000 could probably go up about 4% if we were to get a summary of economic projections that look like that. So there's that. That's my personal opinion. Now let's get into some of these articles. It says AMC share price has crashed by 99% from its pandemic highs. The stock has plunged by over 89% from the highest point this year. Technicals suggest that shares could jump to $40 in the near term. $40 in the near term? Okay. It says, a key challenge for AMC investors is that the company has transitioned into one of the biggest dilution machines in Wall Street. Most recently, the company said that it had raised over $300 million by selling its own shares. In all, AMC has seen the number of outstanding shares jump from 58.7 million in June of 2022 to over 158 million. I mean, he means June of 2023. Issuing new shares is one of the worst things that can happen to investors. It is often seen as the opposite of share buybacks or repurchases since it dilutes its existing shareholders. It also lowers a company's earnings per share and leads to a weak stock price, which I think we basically all know. And here is this right here. IMAX CEO on Taylor Swift says the Eras tour is hitting the big box office, and this does say box office continues to boom. And if we go ahead and just read the last couple of small little paragraphs here. It says, my last AMC forecast was accurate. As you can read here, the weekly chart shows the AMC share price has been in a strong bearish trend in the past few years. The stock has formed a descending channel that is shown in black. It has moved to the lower side of that channel, and that's what you can see right here. AMC remains below the 50-week and 100-day moving averages. Most importantly, the shares are sitting at $7.71, a few points below the key support at $10.95, the lowest points in 2020. Therefore, the risk-to-reward ratio for the stock seems a bit favorable for now. I suspect that the shares will likely bounce back as buyers attempt to retest the upper side of the channel at $40. This means that shares could rise by more than 200% from the current level. The alternative scenario is where shares continue falling as sellers target the key support at $5 per share. And that's basically what I have been saying. $5 per share would be a really stupid attractive price to be buying AMC, right? You're lower than you were in January of 2021 when the company was literally about to go bankrupt. January of 2021 and 2020. You're lower than that now. So like this article says, your risk to reward profile looks really good. And that's what the markets are all about. Investing in anything is risky. The question is, what is your risk to potential return? If your potential return is 200+% or more, but your potential downside risk is $2 per share, from here, right? $3 per share. We're at $8. If $5 is the ultimate bottom, I mean, your risk to reward looks favorable. Whereas if you're buying something like an Apple or a Microsoft, you could stand to lose 20% and maybe see the stock go up 5% in a good outcome, right? If everything goes fine. Now, what are the odds everything goes fine? Well, probably not that good. What are the odds that AMC and the Russell catches a bid in 2024 and does well? Probably pretty high if interest rates do come down and the economy does really start to lack cyclical growth. Cyclical growth means like value stocks, like a Heinz or a freaking energy or whatever cyclical kind of company that revolves around the economy doing well. That's basically what that means. If the economy does well, cyclicals do well. If the economy does not do well, cyclicals do not do well. They're cyclically inclined with the markets. And, if that's the case, if cyclicals are not going to do well, a lot of the time your high growth stocks, your high, beta stocks, a lot of your Russell stocks will tend to do pretty well. So that's another reason why tomorrow is so important. Just maybe less interest rate hikes for next year, or maybe more rate cuts for next year is going to be seen as a pretty positive thing for the markets. Now, this next article says AMC stock failures to deliver reached nearly 70% of August trading volume. A significantly high percentage of failure to deliver in August has raised significant questions about the current state of AMC's affairs. Says such a high percentage of failure to delivers could be related to market irregularities or illegal practices Such a high percentage of failure to delivers could be related to market irregularities or illegal practices such as naked shorting. And it goes on to say, trading volume swelled to more than 380 million shares in August, a month marked by volatility due to the conversion of the company's preferred shares to common stock. This represented an increase of approximately 80 million shares compared to July and a surge of over 600% compared to August of 2022. At the same time, more than 264 million failure to delivers in AMC, meaning that traders were not able to meet their obligations. That translates to nearly 70% of AMC's August trading volume. In addition, the average daily trading volume for August stood at 11.85 million, slightly higher than the average daily FTD count of 11.50 million. It's worth noting that a similar percentage of failure to delivers was recorded in July. During that month, there were a total of 221 million FTDs compared to the trading volume of 299.6 million. That means approximately 73% of traded AMC shares ended up as failure to delivers. What does this high FTD percentage mean? A high percentage of FTDs, such as 70% of AMC's monthly trading volume, indicates a potential problem in the stock market. AMC's loyal shareholders, known as apes, would agree. Failures to deliver occur when a trader is unable to deliver the shares they have sold short within the established time frame. This can result from various situations, including naked short selling, liquidity problems, market manipulation, and system failures. Errors in clearing and settlement systems can also lead to FTDs. Market manipulation says in some instances, AMCs can be exploited to manipulate share prices. Liquidity problems. When there are no shares available for borrowing in the market to facilitate delivery, FTDs can occur. Now, how does that happen? Along the lines of manipulation or naked short selling. This happens when short sellers sell shares they don't own or can't borrow, effectively creating synthetic short sales. Now, what these FTDs have ultimately done is dilute AMC as well. On top of AMC diluting AMC shares, you've also seen a lot of FTDs that have diluted AMC's share price. Now, it says the bottom line. It's important to note that a high rate of FTDs may not necessarily be indicative of trouble. Instead, this could warrant further investigation to understand why so many failure to delivers are occurring in a specific stock. And for whatever reason, that just does not seem to happen. Nobody even cares as far as the regulatory bodies. But anyways, one possible reason for the exceptionally high FTD percentage is extreme volatility. This is what has transpired with AMC shares over the past 2 months, which were marked by court battles, dilution concerns, arbitrage trading, earnings results, blockbuster movies, and other factors. AMC's beta went from over 5 between July and early August to a remarkable -6 at the end of August. Typically, this level of volatility is observed only in extraordinary cases, and that's basically what you have seen the plummet in AMC's share price. Nevertheless, the question remains whether factors other than extreme volatility are contributing to the recent surge and failure to deliver figures. Throughout this year, when questioned about this issue, AMC CEO Adam Aron has emphasized that he has engaged with the bigwigs at the New York Stock Exchange to appraise them of AMC's status on the threshold securities list and the issues associated with the substantial number of failure to delivers, including AMC shares. And that is all. So that's actually pretty dang crazy. The fact 70% of August trading volume was failure to delivers. How does anyone even let that happen? That's actually ridiculous. Now, let's get into some of the option flows next. We're going to take a look at the Ortex data. You got to take that, as you know, with a huge grain of salt. But we can look at some of the option flows. So expiring by this Friday, you have 10,500 calls that are currently at the $8.50 strike. Now, the $8 strike also went into the money today. That was about 12,500. So that was really good. You had about 13,000 puts at the $8 put go out the money. So $8 should have been a strong level of resistance, and we have seen it be a strong level of resistance in the past, but today, in fact, you just went straight above $8 per share. That is great. $8.50, you have almost 11,000 for open interest on the call side, and about 3,300 for open interest at the put side, which is interesting here. You have a lot of calls just outside of the money. But on the put side, the puts are actually pretty far out the money. The $7 put is pretty active. So AMC stock would have to be in the $6 range for these to go into the money. That just doesn't even look very likely unless the markets were to go through some kind of bad event with the Fed. That's not going to happen this week. At the 650, you have 12,000 puts held in open interest, 5,000 at the $6 put, and at the 550 put, you have almost 35,000 for open interest. These are very, very high numbers. And on the call side, a lot of the calls for open interest are really focused from here until the $10 strike. So I do think if tomorrow is bullish as far as the Fed, and the Fed does not give the markets a reason to just utterly plummet, AMC stock could perform pretty dang well. And, $10 per share by the end of this week could look pretty plausible in my personal opinion. So there is that. Now let's take a look at the Ortex numbers. Like we said before, guys, you had 23.21 million shares that were currently sold short at the last exchange reported short interest. Right now, it looks like almost 27 million shares are sold short. So it looks like there is a lot of additional shares that have even been sold short just over the last couple of days, essentially, since the last exchange reported short interest, so not that long ago. Cost to borrow fees, very low. Cost to borrow max at about 8.6%, cost to borrow minimum at 4.33%, cost to borrow average at 5.09%. If we have another strong day tomorrow, I imagine the cost to borrow fees would rocket higher, simply put, because when there's more volatility in AMC, if you lent out your shares, you could miss out on gains because AMC stock is going higher. Typically, you would ask for a higher cost to borrow fee, right? That's the best way to think about it. So we've seen nothing but basically downside with AMC for so long that a lot of people are just willing to lend out stock for 5%. They're like, we're cool with that. AMC has not went up 5%. We've lost 85% in the last couple of weeks. I'll take 5%. Now, if the stock does start to rally, then your cost of borrow fees likely go up with it. So there you have that. And last but not least, I do want to point out, you guys should also be watching the Fed rate monitor tool coming tomorrow with the Fed projections, because the Fed projections for 2024 are directly going to change the estimates for rate cuts or even potentially rate hikes. Now, odds are you could push out rate cuts even more, but I don't see that as likely. Now, even if we get rate cuts sooner, I don't see that as a great thing either, because if we're getting rate cuts sooner and inflation was just really hot, that means the economy is not doing well. So you want to watch and see when the markets start to expect the first rate cut. And currently, markets are at a literal coin toss for June being the first rate cut. Technically, right now, we're still expecting a hold from now until June. So 3 months left of this year. 6 months in 2024, that's 9 months total. We don't expect another rate hike. We don't expect a rate cut. That's a long time. And then by July, the odds of a rate cut are at 35.4%. Odds of 2 rate cuts by July at 23.7%. And that's kind of interesting that by July, there is a 24.7% chance that we don't get rate cuts, we don't get rate hikes. The Fed just holds until June. Now, there is, or till July. There is now, ooh, look at that. The odds just changed literally as we were speaking. The odd is now 24.5% for 2 rate cuts by July. So there's a greater chance of 2 rate cuts by July rather than the Fed holding through July. That's crazy. And they could, the probabilities could move around quite a bit. And check this out. There's even a 1% chance that we get 4 rate cuts by July. There is an almost 8% chance that we get 3 rate cuts by July. So the Fed, yeah, is going to move around these probabilities quite a bit, ladies and gentlemen. That is going to do it for this video. Again, I just want to reiterate as far as AMC's technicals, MACD looks very well. We talked about this in the last video, so I didn't highlight it all too much. The MACD looks very good, starting to curl up, looking pretty dang bullish. Yellow line is above the blue line. That is great. The RSI is starting to curl up as well, almost back into a normal range. You're still on the oversold side. You're still technically oversold, even if we do go into a normal range. You're still going to be in the 30s, which if you're playing for a bounce, you want to buy during these moments, right? When the technicals look oversold, when the stock does start to catch a couple of green candles, right? There's obviously volatility back and forth, but there are some buyers stepping in down here, and there was right here before we got the dilution news. So you're just at a slightly lower price compared to in here, where it was nothing but reds just falling each and every single day. This is really where you'd want to take your stance and buy the dang dip. I'm obviously not a financial advisor, not a financial planner. Come to your own conclusions, all of that good stuff. But this is going to do it for this video. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.